everyone. So today we are starting with the topic government budget. Okay. Here we will discuss about two things. That is, first one is receipts and second is expenditure. These are two main aspects of government budget. Okay. Receipts are also divided into two parts. First one is revenue receipt and the second is capital receipt. Expenditure is also divided into two parts, revenue expenditure and capital expenditure. So, government budget is basically focused on two things, that is receipts and expenditure. And receipts are further divided into two types. First one is revenue and second is capital. Expenditure is also divided into two parts. First one is revenue and second one is capital. Okay. So now we have to know the meaning of revenue and capital. Revenue nature and capital nature. So what is revenue nature and what is capital nature? Capital nature includes all those items which affects assets and liabilities. Either assets or liabilities. If anything is affecting either asset or liability, it will form part of capital nature. For example, we have purchased one land. So, if we have purchased land is an asset, so it will form part of capital expenditure. Okay. It is a type of capital nature expenditure because it is affecting asset. Okay. So, if any item, any transaction is affecting asset or liability, then it will form part of capital nature. And if they are not affecting assets and liabilities, then it will form part of revenue nature. For example, we are paying salary. Okay. So, salary is not affecting assets, neither they are affecting liabilities. Okay. So basically we are paying monthly salary to our employees. Okay. So it is a revenue nature expenditure. So revenue nature includes all those items, all those transactions which do not affect balances of assets and liabilities. But if any transaction is affecting balance of either asset or liability, then it will form part of capital nature transaction. Okay. So now we know the meaning of revenue nature and capital nature. So again, government budget is divided into two parts, receipts and second is expenditure. Okay. Receipts are further divided into two parts, revenue receipts and second is capital receipts. Expenditure is also divided into two parts, revenue expenditure and capital expenditure. Now we know the meaning of revenue and capital. Okay. Revenue which do not affect balances of assets and liabilities, and capital is which do affect balances of assets and liabilities. So, revenue receipts are also divided into two parts, tax receipts and second is non-tax receipts. Okay. See, government budget is focused on two things: what government is receiving and where government is spending money. Okay. So the main source of income is tax, As we all know, the government is earning through taxes. So, whatever they are earning through taxes, that will form part of tax receipts. But government is also earning through some other sources. Examples are, for example, government is taking fees. If you want to apply for a license, driving license, then you have to pay some fees. That is also a source, income source for government. But it is a non-tax receipt. It is not a tax receipt. Okay, this is not a type of tax, but still government is earning that thing. So it is a part of revenue receipt because fees is government is earning fees on regular basis. It is not affecting assets and liabilities. That's why fees is forming part of revenue receipt. But it is a type of non-tax receipt, not a tax receipt. And capital receipts are all those receipts which either affect asset or liability. Example, if government is taking some loan from any other country or from IMF, then borrowings, loans, they are a part of our liabilities. That's why we have covered borrowings under capital receipts because all those items which affects balances of assets and liabilities, they form part of capital nature transaction. And right now we have borrowed some money from other country, so it will form part of capital receipt. Now we'll discuss about revenue expenditure. Government is spending on regular basis. Example, government is paying wages to the workers, they are paying salaries to the workers. So it is a type of revenue expenditure. But if government is purchasing some land, government is investing some money in some other country, then it will form part of your capital expenditure because investment is an asset. So if government is investing some money in some other country or somewhere else, then it is a part of capital expenditure. So now we know the meaning of both revenue receipts and capital receipts, and revenue expenditure and capital expenditure. Revenue receipts was further divided into two parts. Tax receipt, non-tax receipts. For example, government is collecting GST. So GST is a type of tax receipt. Government is earning income tax. Okay, government is charging income tax. So that income tax is government's income. Income tax which you are paying now, that is forming part of government's income. So it is a kind of tax receipt. But if you are paying some kind of fines or penalty to government, then penalty or any kind of fine, we Indians are paying fines or penalties on regular basis. So we have to obey the rules, we have to follow all the rules. Then this collection, the government will collect less penalties. But penalties are a kind of regular source of income for government. That's why it is a revenue receipt, but a non-tax receipt. Non-tax receipt. So whatever government is receiving, but it is not a type of tax, then it will form part of non-tax receipt. But if government is charging some kind of tax on income or on sales, then it will form part of tax receipts. If anything, if any transaction is affecting asset or liability, then it will form part of capital nature. If we are receiving money, for example, we have sold our investments and we have received some income, then it will form part of capital receipts because we have received some income. Yeah, we have received some money. So if we have received money and it has affected asset or liability, then it will form part of capital receipt. But neither it affected asset nor liabilities, then it will form part of revenue receipt. In expenditure side also, if Government is spending some money, and it is not affecting asset or liability, then it will form part of revenue expenditure. But if it is affecting either asset or liability, then it will form part of capital expenditure. Okay, now we'll move to next topic, that is, see, if both expenditure and receipts are equal, whatever we are spending, we are receiving that much money. So this is called balanced budget. This is a balanced budget. Okay, but there are two other things also. That is, if expenditure is greater than receipts, or if expenditure is less than receipts. If expenditure is greater than receipts, means we have to spend more and we are receiving less money. It is called a situation of deficit. What do we have to do in this kind of situation? We have to borrow money. We have to borrow money from outsiders or from private sector. And in this kind of situation, we are receiving more money, but we are spending less amount. This is called surplus budget. This is called surplus budget. It is not a favorable situation. If we are thinking that we are receiving more money, but still we are spending less, it is not a favorable situation. It means whatever we are receiving, we are not utilizing that amount properly. We are not spending that money for the welfare or for the GDP growth. So, if we are receiving that much money, means if we are receiving more money, then we have to spend more. Either to increase GDP, either to increase welfare, but we have to spend that money. Okay. So, if we are thinking that receivings are more than expenditure, then it is a kind of good situation. No, it is not a good situation. And if expenditure are more than receipts, it is definitely not a good situation. Because we have to borrow more money from outsiders. So, out of these three options, what would a country choose? Country choose to be in this kind of situation where their expenditures are equal to their receipts. So this is called a balanced budget, and these two are part of unbalanced budget. So if expenditure is more, then we have to borrow more. And if receipts are more, then it means we are not utilizing our resources in proper manner. We have to spend more. So now we'll discuss about deficits. Okay. There are three types of deficits. Now we'll discuss about these three types of deficits. There are three types of deficits. First one is revenue deficit. Second is fiscal deficit. And third is primary deficit. Revenue deficit arises when revenue expenditure is greater than revenue receipts. When our revenue expenditure is more than revenue receipts, so what kind of situation appears? Revenue deficit. And if total expenditure is more than total receipts, these total receipts are other than borrowings. These total receipts are other than borrowings. If our total expenditure is more than total receipts are other than borrowing, then it is called fiscal deficit. See, I tell you one thing. For example, country has received 800 crores. Okay, 800 crores. Government has received 800 crores. And government wants to spend 1000 crores. Practically, it is not possible for any person or for government also that they are having 800 crores and they are spending 1000 crores. It is not possible. So, what they will do? 200 crores. For 200 crores, they have to borrow some this money from some other country. Okay, definitely they have to borrow if they want to spend 1000 crores and they are having 800 crores. So 200 crores they will borrow from other country. Okay, whether they will borrow 200 crores or more than 200 crores. The question is whether they should borrow only 200 crores or more than 200 crores. Some people will think we should borrow more than 200 crores. Why? For to be some to have some margin also. No, that's not a good situation. We should not offer this thing. We have to borrow only 200 crores, not more than that. Why? Because we have to pay interest on that amount. So it is not good to borrow more money than we need. What we need, we have to borrow only that much amount. Okay. So we will borrow only 200 crores, not more than that. Okay. So basically, this will also form part of total receipts. This will also form part of total receipts. And our total receipts will get equal to total expenditure. Once we will borrow this 200 crores, then our total receipts gets equal to total expenditure. So, what is a fiscal deficit? Where total expenditure, this total expenditure is more than total receipts other than borrowings. In total receipts, we are not including the amount of borrowings. Okay, so 1000 crores government wants to spend. 800 crores they are having. So how much money they will borrow? Answer is 200 crores. Answer is 200 crores. And what is fiscal deficit? Fiscal deficit is total expenditure minus total receipts other than borrowings. Okay. So total expenditure is 1000 crores. Total receipts other than borrowings 800 crores. So 1000 crores minus 800 crores. Fiscal deficit will be 200 crores. This 200 crores is equal to what? Is equal to the amount of borrowings. So fiscal deficit is equal to borrowings. Because once we will borrow these 200 crores, our total receipts will get equal to total expenditure. So fiscal deficit is equal to borrowings. And last one is primary deficit. And the formula of primary deficit is fiscal deficit minus interest payments. Fiscal deficits minus interest payments. Okay. Once we will subtract interest payment from fiscal deficit, we will get primary deficit. Is that clear?